Hit it.
It's Monday, December 23rd, 2024, episode 255. I'm Patrick Serezna.
And I'm Kevin Muir. This week we have no guests. So for those of you who tune in for the smart comments, we'll see you next year. For the rest of you, Patrick and Danny and I are going to shoot the shit in a fun holiday shortened episode.
There you go. And Danny, we're recording this early morning on a Monday. First of all, I'm in Toronto, so I can't even take advantage of the European time zone to start drinking early. But no beers today.
No beers, but no beers for you, but maybe
Patrick, Danny's already started, buddy.
It's Christmas already.
You know what? Awesome.
All right, let me do the disclaimer here. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include the gamma grip grind, the FOMO frenzy fallout, and the breath breakdown bluster.
Those are severe.
Yeah,
you don't want to get caught with any of those. You know what? I have to comment. Like, Danny has a great studio setup going for himself over there.
I was inspired by somebody else, and I saw it on YouTube, and I thought, you know what? I want to do the same thing. Exactly the same, though, but exactly the same.
That's right.
Yeah.
For those who don't know, Danny's a hold up in Patrick's studio in Portugal, right?
Yeah.
You need to have multiple, studios, Patrick, all over the world.
Absolutely.
You're a jet setter.
Absolutely.
International man of mystery.
That's exactly it.
Okay, let's talk some markets.
All right, let's do this. So let's start off, talk about the top three things we were watching last week or a couple weeks ago. By the way, we are recording Monday on the 23rd. Normally we do this on a Friday. So it's not been 2 weeks since the last time we did this, but lots happened and we have to talk about it all. So the one thing that we were talking about a couple weeks ago was whether it was going to be a fake out or a breakout in gold. And well, that was a big fake out. That has proven to be the case. That was a quick start on the upside. We'll pull up the chart in a moment, but it did not follow through and gave it all back. And it's now, we'll talk about the chart, but I think it's going to grind it out a bit. Did you, you're smiling, which is what was, you thought something different was going to happen?
You know what, Patrick, I'm smiling for something else. I'm already looking at things. I've learned how to cheat. And actually, I used to just watch my phone before this was video. And now I've learned how to cheat. I use my computer to actually do other things while you're chatting.
Oh, okay. So number two was, does the S&P 500 gamma pin prevail? And it was pinning very, very well right up until the FOMC. And the way I described it, Kev, was it's like that gamma pin is like a comet falling into the orbit of a planet. Like once the gravitational pull grabs it, it becomes a dominant force. And sometimes you would need something to knock it out of that gravitational pull for it to stop working. And the FOMC did exactly that. What are your comments on it?
Well, I do think it was the kind of market anomaly that people were not giving enough attention to while it was happening. And I think it was also causing some really interesting things within the market. So first of all, I completely agree. For those 2 weeks going into the FOMC, I actually had a chart where I put the actual high and low of the range, 1.2%, Patrick.
Yeah, no,
it was just like it was pinned there. It was huge.
I have the red line right here. Hold on.
Yeah,
and you can observe before that FOMC day, like just literally.
If you go to the hourly and you start looking at it, and every time I'd be like, "Oh, here we go, we popped. Selling's going to come," and then we'd go back down. Everyone get bearish, 1 hour. And there you go. And it would be everyone get bearish, then they'd come back and buy it. It was very tight. And one of the things though that I think doesn't get enough attention there, and this is something that Jem Carson, the S&P index / option guru, he's the one who's kind of really brought this to my attention, is this dispersion trade. So if the index is pinned and something happens to one of the elements or a big portion of the of the index, i.e. the Mag 7, if it goes up and yet the index is pinned, it means something else has to go down.
Exactly.
In those 2 weeks, even though it felt like the S&P wasn't going anywhere. Sorry, it didn't feel like it. It actually wasn't going anywhere. Huge things were happening in the market.
dying to talk about it. Let's get the charts up for that. Let's go quickly through these, and then because what you're bringing up has to be discussed in great detail.
Okay,
we're going to spend a good chunk of the show kind of digging deeper into this. The last thing, of course, was number one, which was the FOMC, and that was quite the doozy, wasn't it? And
it was interesting what got everyone so excited because, they had telegraphed that it was going to be a hawkish pause. So that was no surprise there. But what was a surprise was how much they raised their inflation expectations. And I don't think enough people talked about that either. And I wrote about this. If you go look at the summary of economic projections and you actually go look, it's more than just the dots, Patrick. There's actual, like, Google it, pull it up, and you can see that it's a full kind of presentation. And when you see their forecast for forward inflation, it dramatically uptipped. And that's the part that the market, I think, had a lot of trouble digesting.
The one thing though, I'll make the call now. I'm skeptical of it. While I do believe that if a whole bunch of tariffs were implemented, that there would certainly be knock-on effects to a temporary rise in prices as it adjusts for whatever would come from it. But I don't think the tariffs will be remotely as effective as everyone thinks, because I don't think Trump is using it, I think, more to start negotiations than it is for him to raise prices on Americans right across the board. I don't think it's going to have as big of an impact, but I also don't think that we're going to see that monetary inflation. It's going to be like maybe some of these short-term supply demand driven ones, but I don't think that this is the big kahuna. And I think there's lots of room to fade it in the first quarter of the year.
So I understand that argument. And my pushback will be that everyone believes that. That is consensus. You have just described Wall Street consensus. And yes, although the Fed increased their inflation target, almost nobody expects any serious tariffs to go through, at least in terms of like Canada and Mexico. And if you're right, I think there's very little upside to that call, because I think that the market will have anticipated that. And I'm more worried that Trump is going to surprise people. And I'm just going to highlight something. Stephen Moran was just, I think he's the president's new appointed economic advisor. And I can't remember. It's one of these new things that Trump just appointed. And this is what he wrote on Twitter on, 2 weeks ago. He says, at the end of the day, government has to raise revenue via taxation. Higher tax rates are much more dangerous than lower tax rates. Taking effective tariff rates from 2% to 20% seems way better than taking marginal income tax rates from 30% even higher. And I think that the market is underestimating the possibility of Trump using tariffs to actually raise revenue. And I continue to think
that he's trying to push through a big tax cut. So he's got to compensate somewhere.
So yes. But the thing is, the market is kind of like, I look at it and I think about Trump's inner circle as having two groups. One being like the Steve Bannon, Bob Lighthizer, we're going to reorganize how the American economy works group.
Yeah.
And then the other being the Elon Musk, Scott Bessent, we're going to deregulate and cut taxes and just let the economy go. And I think that those two groups are very much at odds with one another.
Right.
And you can already see it. Supposedly Bannon did an interview recently where he shit all over Musk, and it's very clear that they don't like each other. And so far, Musk seems to be winning. Like, he seems to be at the president's side all the time, and his policies are getting implemented in terms of like this latest debacle with the continuing resolution or whatever. But I'm not as sure as the market is that Steve Bannon's kind of, let's put tariffs, let's reorganize the thing, isn't more of a plan than everyone thinks. And so to me, the surprise won't be that Trump is just using these things as a negotiation. The surprise will be, oh shit, he actually means the things he says.
Oh, we're about to find out. I mean,
Yeah.
we have a couple episodes still before the inauguration, so we'll discuss this one in lots of episodes to come. So let's talk about the top 3 things to watch in the coming weeks. Now, we are doing the next episode on the 3rd of January, so this is what's going to happen between now and our next episode. The one thing that I'm watching is central bank policy moves. I don't think it's actually, I shouldn't have said policy moves, but rather language that comes from them, because especially now that the FOMC has made this pivot. Well, I don't know if you want to call it a pivot, but it was clearly, changing market expectations. The question becomes, what do all the other global central banks around the world start messaging? Because they often have a response mechanism to FOMC. What are your thoughts here?
I don't think they can, Patrick. I think the global economy is rolling over, and it's unusual to hear me kind of more on the dark side of the bet here, but I really don't think the economy is as strong as everyone believes. I suspect that this Fed pivot might be a mistake, although who knows? I don't know what I would do if I was them. I think they definitely should be going slow. I don't think they should be really signaling anything, and I've always kind of been shocked that you would ever signal that this is what's going to happen and, give away your optionality. To me, I'd be just like, if I was setting policy, I'd be like, right now, we think it should be lower 25 basis points. We'll see next month. Stop asking me questions. Like, I just, like, to me, it doesn't seem to. But anyways, so I'm worried about this idea that the other central banks are going to have to pivot more hawkish as well, because I don't think they can. Let's just take Canada, for example.
Oh, they can't.
Like, we can't.
No.
Like, you tell me ECB can? Like, nobody can.
The interesting part, Kev, was that my thesis, which was at the start of the year, I had no clue how the elections were going to play out and how all the chips were going to fall. But my thesis always was that the problems were going to occur outside of the United States. And inevitably, as things break, it would trickle back into the States, and that everyone staring at economic numbers in the U.S. will be missing where the real warnings are. But now it's even my conviction on that call is even that much stronger. I think Europe is going straight into a recession. Canada is pretty much in a recession. These kind of things are going to start happening, and at some point, it's going to manifest in a very strong dollar. Actually, well, I'll just put number 2 there so we can segue this into our second thing to watch, which is the U.S. dollar is strong, because it's the strongest of economy out of all of these. And the central.
Are you going to say it? Say it, Patrick.
No, I won't.
Come on, say it. It's the cleanest shirt in the dirty laundry pile.
I'm not saying it. All I'm saying is that there's a lot of broken things out there. And the thing is a lot of people are using the U.S. dollar to hide. And this actually is counterintuitive to what Trump wants. Like,
well, I'm glad you said that, because a lot of people disagree about that, but I'm with you there.
I don't think he wants a strong dollar, because it doesn't make sense. I mean, when you're trying to get everything running again in the United States, you can't have your currency so strong that it's your labor and everything is uncompetitive.
Yeah, I actually think it's at the crux of the matter of why America has lost its competitiveness in terms of manufacturing. You can't compete with the dollar there. And specifically, it's the Chinese renminbi and the Japanese yen. They both need to be, 50% stronger.
Like, what if that scenario happens, that the U.S. dollar is ripping to? Actually, well, let's pull up some charts. Let me just put number 1, and I want to talk charts, because this is a great conversation. Number 1 is market seasonality. Now, obviously, the FOMC threw a curveball, but here's the Santa Claus rally, year-end tax selling, and all these fund positioning for year-end, all this kind of stuff going on. Any thoughts on what?
The FOMC threw a curveball, but I don't know if you've been paying attention, Patrick, but I've been hammering home this 2021/22 analogy with the current market.
Right.
And if you go back and look at the 2021 market in December, although the FOMC, it initially rallied on the news, it then had a 4% correction, which then was bought, and it rallied right into year end.
Yeah.
And so I just contend that it's following that pattern, that analogy pretty well. And like, I kind of feel dirty even just using these analogies, because these kind of replays of different times, because it doesn't seem like it should work. But to me, the reason this works is because of I go back to the Jem Carson, the options structures out there really think this is a situation where the tail is wagging the dog, and that this is just the flows from these options create these environments. And I could very well see just a repeat of 2021 where we rally right into year end. So I know everyone's all of a sudden now given up on the Santa Claus rally, and there's lots of long faces out there, but it wouldn't surprise me at all if in kind of a holiday shortened, illiquid sessions after Christmas, we just get, a bunch of 1 plus 2% days.
Well, Kev, when we really look at it, we're at I think a very important technical crossroad on the S&P, because we had obviously a drop that has pushed the market out of gamma pinning. And we bounced on Friday, recovering about a 50% retracement of the drop. And this is in my mind, the make it or break it moment on the index, because if you're right and this market tacks on a couple of up days, then it's coming right back into that high gamma pinning that's going to prevail for the rest of the year up along that previous highs. But to me, if this market in any way rolls over, I'm going to put on a 4-hour chart, or even forget that, I'm going to put on a 1-hour chart. And what I want to simply highlight is that if this market in any way starts breaking down from here, then there really isn't much stopping say the opposite. There's not much stopping the market from doing selling on the downside. And a lot of that, I think, is whether or not the Mag 7s start selling. You were talking about this gamma pinning, and I want to go deeper into this, because something's got to give. If the index itself is pinned and the Mag 7s are ripping higher, something else in the index has to sell off in order to keep the index itself there. And what we witnessed was one of the most spectacular collapses of market breadth in a short window of time. You can see here on this S&P breadth indicator that we have seen with the market being pinned up at the highs. Like, we literally went from 70% of stocks above their 50-day moving averages to 20%. And the S&P was still a stone throw away from its all-time highs.
Yeah, it's basically they kept everyone. It was a mad scramble into Mag 7, Patrick.
Yeah,
at the expense of everything else.
And literally, it was just index rebalancing, almost some degree or another, as all that money was flowing into those mags. It was basically collapsing, and the kind of oversold things that we have seen, it's insane. Like, we can go quickly through some of these different ETFs just to see which sectors were the ones that were murdered the most. But I want to start with just talking about these mags, because this is the Mag 7 ETF, the symbol MAGS. And this run on the upside was just like this parabolic rip in a period where the rest of the market was just dead. Like, it was pouring in there. Like,
and you know what's funny? It started, if you go look at it particularly in kind of like more detail, and you like decide like where did it start? It started the Friday after the Thursday Thanksgiving. It literally, it was like everyone went to Thursday Thanksgiving. They came Friday, it started, and then the next week it just took off. It was unbelievable, Patrick. It's like literally one of the most painful periods. Like, one of my buddies put something he wrote, and I used it as my trading wisdom because I thought it was such a good line. He said, "Now I know how Julian felt in 2000." And Julian is Julian Robertson, who famously tapped out right at the lows of the value trade in 2000 because he couldn't take the pain anymore. And I know for retail might have looked at those last couple of weeks and said, oh, that wasn't that big a deal. There's nothing really happened in the market. I can tell you most active managers are underweight Mag 7.
Absolutely.
They just have to be, because the reality is it's such a large portion. It's almost, it's not appropriate for most people to be long that. So this move was extremely painful for professional money managers,
especially who are trying to protect their year-end performance numbers.
And I almost think that that's why it happened, Patrick. Like, that is why this occurred. This was a mad scramble into Mag 7 for everyone that didn't own enough. And it just kind of started feeding on itself. Another theory, and a smart buddy of mine said, was that he contends that many endowments / pension funds are overweight privates, and the privates have underperformed public markets. And, like, apart from SpaceX, I think that most of the privates are actually down on the year. And so, given this underperformance, they were chasing the Mag 7 winners to put them on the sheets for the year end. So to me, these past 2 weeks have felt like a mad scramble into Mag 7 at the absolute worst time. Like, I really think this will be the end. Like, that will be, whether it's today, next week, or 2 weeks from now, I don't care. But we are in the final throes of the Mag 7 will eat the world. You have to own this. Everyone is long now, this thing, and everyone is overweight.
Yep. And what's amazing is it came at the expense of value and all these other sectors. Like, this is just the value ETF. But we had, like 12 consecutive down days. I don't think there was a period you can go back in history to find 12 consecutive down days. It's insane. The amount of selling, but just so many sectors were just devastated. Like, look at the energy sector. Like, the energy sector, first of all, rallied on Trump winning the election, and everyone got excited about it. But the carnage in this energy space in the last 2 weeks in this rotation is unbelievable. Like, this, really, it's not even 2 weeks. It's like a month. It's but there's so many of these sectors, healthcare, biotech. Let's just go through them all.
Yeah, do it. Show us the charts.
Actually, do we want to first go through the Mag 7s themselves? And
it's up to you, buddy.
Let's start with the positives. Let's start with what worked, and then we'll go from there. So, like Apple is still making 52-week high, or fresh new high. Like,
someone told me, actually, I saw that the Apple forward PE is now above Nvidia's. I haven't checked it, but that's what someone said, which I thought was interesting. Like, Apple is like, think about, okay, we're about to go into a trade war with China.
And
like, if you go look at the companies that are most exposed to, problems with China, it's like, they're like, oh, I think I'll buy Nvidia and Apple. Pardon?
Okay, and the irony of it is that, like, okay, fine, Apple will probably have a very well protected market in North America, in a sense that they have a secured market share, but China is pumping out phones that are literally 1/10 of the cost of an iPhone. And they're going to dump that on the emerging markets. Like,
but it's not that, Patrick. What if they do tariffs in return? So all of a sudden, everything built in China has it. We have to pay 25%. Like, it almost feels like if you're thinking about buying an Apple, like Mac, like a MacBook or a phone, you should probably do it before the 20th. Like, I don't know. Maybe I'm over. Like, Tim Cook's pretty smart. He's pretty savvy. He seems to figure out a way to quietly play Trump and Xi, like, in his way. And so if anyone's going to go, navigate through it and stick handle through this, it's probably Tim Cook. But having said that, still the market is pretty complacent about that risk.
Absolutely. So moving on, Microsoft, interestingly, has been the big laggard, in my opinion. I mean, we could argue there's another one or two of them, but the thing is that Microsoft was the one that never beat its summer highs. And it took forever to even just beat the September, October highs. And so this one was the one that took the least flows, arguably on that front. The one that made the big save had to have been Google. Like Google was dogging it quite significantly, antitrust, all sorts of issues coming in, and then obviously comes the positive news about its quantum computing, and this thing going as in blast to new highs. This is actually still a chart that looks like it can go higher. When you have a consolidation after a gap higher, typically this has room to follow through. I would argue out of all of the Mag 7 charts, this one, at least technically, feels like there could be one more leg higher, even though Apple's making new highs. I think that this one just sets up a little bit cleaner. I love these kind of little pullbacks for a couple of days to buy dips on that front.
I think 1 second before you leave that, Patrick, in some ways, Google's like the perfect, Mag 7 right now. Because first of all, it's cheap. As you say, it was left behind because of the issues. Not only that, if you go look at it, I think they're going to make their own AI chips, or there's something there, but they were definitely, in terms of quantum computing, like they're, right there with all the other quantum guys. And if you go look at those quantum stocks, like we haven't talked about those, but that was kind of like a little mini rolling bubble within this bubble, because the quantum stocks went absolutely bananas. Like, have you been following those?
No.
Oh, really? Oh, like QBTS. I think that's one of them.
Yeah.
Like, look at this chart. Like, it's crazy.
Yeah.
There's like it's absolute madness.
$10, just like that.
And there's a whole bunch of them that have done this sort of thing. The madness in that square has been just out of this world. And I'll just say one little aside, Patrick, about this. I distinctly remember during the .com bubble, everyone was excited about the internet. That was the kind of the main force of the bubble.
Right.
In the final throes of it, we had a situation where all of a sudden Linux became a hot, little mini theme within it. To me, this quantum feels like that portion of it. Like this feels so much like the .com to me, and I know everyone will tell me, "Oh no, it's different. They're making money this time."
Of course, it's different. It's
always different. But to me, this quantum, I was like, "Oh, I've seen this before. This is Linux." Yeah.
You know what? There's always going to be survivors. There's always going to be money made in the end. But the thing is that so many of these players are going to fail, and these are given valuations like they're going to be, the next major Mag 7 stock. And there's going to be a period where a whole bunch of these are going to give back 90% of these gains, just because they're not going to be the market winners.
Yeah.
And of course, if you pick that market winner like an Amazon back in 2000, even though you went through a huge pullback, you held it long enough, it was going to be fine. But there's got to be a whole bunch of these that will fail. Right. And the thing is that you can't just go and assume, just because the quantum computing is the future, that these stocks are the ones that are going to hold up. Right. And that's going to be the tricky part on all of this. Now let's move on and talk Meta for a second. Now Meta, kind of, I would say, is like it was participating, but this is not where the action was. It was just getting the love because it's in the basket, and as people are sprinkling in Mag 7s, and it's getting some flows, but I wouldn't want to talk this one up like this was where the action was. But let's talk about where it was. Obviously, Tesla was ripping like nobody's business. It almost hit $500, making Elon Musk redonkulously rich on paper anyway. But what a rip this had. And do you have a comment on this before I go to the next one?
No, I just, once Trump won and I saw how close he was, I was like, I'm not touching this thing from the short side.
Oh yeah.
And I was just like, he's part of the government now. Like it just felt like, having said that, oh, Patrick, it's taking every ounce of fiber in my body to not, go back to the short side of this thing. It's so ridiculously priced.
In order to short it, you have to almost wait till it breaks down and accept that you're not going to start shorting at 500. You're going to short below 400 on the way to 300. Like you can't, you got to stop obsessing about catching the high, because the thing.
Listen, I'm not obsessing anymore. As I said, I took it off my screen once he won the election, and I realized how close he was. I said, that's it. I took it off. I'm not touching this thing. It's been a great call. I consider it a huge win that I have not lost money.
Yeah.
This is about as close to long as I get, is to not be short. But having said that, this is like just absolutely asinine, like the valuations. And I don't know what's going to bring it back to earth. And if anything will, who knows? Maybe not. Maybe he figures out a way to continue just printing money, and this thing just gets even more and more. But it just, Patrick, like
you can't stand in its way. Like it's like a rocket ship with a shitload of fuel in it right now.
Yeah.
It's blasted off, and you got to stop trying to predict when it's about to run out of fuel. No, eventually it will, but you got to first let it burn out all the fuel. There's money flowing because everyone's chasing what's working, and Tesla's working, and so everyone keeps putting. It's like a Giffen good. It just keeps feeding on itself over and over again. And you just got to let it finish the cycle. There's got.
I'm really disappointed in you. You think it's going to run out of fuel? Don't you know he's going to come up with perpetual energy?
That's true.
It's Elon you're talking about.
It's true. It's true. Like,
like
at some point, the market capitalization of Tesla will be greater than the entire stock market.
That's right. It's going to be more than 100%. Just don't. And Patrick, put in the hours. Make sure you put in the hours to do the research, and then you'll know.
Amazon. Let's talk Amazon.
Okay.
But Amazon's been a very clear bull run. It's been one of the places where all the money is. But what's crazy is the XLY, the consumer discretionary ETF from Spiders.
Yeah.
It's 40% weighted in Tesla and Amazon.
Yeah, I know. Because I went and did, I did the Friday Thanksgiving to like the top of the market, to the FOMC. I did the sector returns, and I went and looked at it, and the three sectors that were up were all these, and because they're in strange spots, right? Like consumer. Now, did you say is that consumer discretionary?
Yeah.
Yeah. So it's consumer discretionary. So I know what it is. It's consumer discretionary. It's infotech, which is basically technology, and then it's communications. Because Google is a huge portion of communications
basket.
So anything, if you had some Mag 7 in it, you were up, and everything else was way down.
Exactly. And so this is like a disguised index, like because really in the end you were weighted completely into these mags, right?
Yeah.
Anyway, let's just quickly touch on the last few here, and let's talk Nvidia. And what's interesting about the Nvidia chart is that it didn't participate, but it doesn't really, in my mind, look that bearish. Because when you have a consolidation of this manner, where just consolidating more like sideways, this is like a zigzagging correction, there's always room for a continuation pattern. And it feels like Nvidia still could surprise everyone with an upside move. I think that this is still the stock to watch, because when the next proper bear market decline is getting underway, Nvidia's got to be the ones that is going to be breaking down, but it hasn't broken down. Like, to me, this is not yet bearish, and it'll be really interesting to see, will this be a fake out? Like, think of what happened with gold in the same manner. Like, could there be a fake out which ends up being a double top, and it puts in a bigger topping formation? I'm not sure, but if right now, for instance, if you're right that there is a Santa Claus rally, and into the year end, we have a market that kind of presses back upward towards its highs, I wouldn't be shocked if Nvidia hit 150 again during that impulse. But the bigger question is, will it have a bullish continuation pattern ripping, to 160, 170? Like you were saying, this is a stock that's going to be impacted by Trump's inauguration. The question is this still going to get bullish flows? Technically, we'll see. Any thoughts?
So I do have some thoughts, because although I agree, when you look at the chart on its own, it's easy to say, hey, it's not so bad. It's just it's drifting lower. But if I had told you that the Mag 7 was going to lead the rally on the last 2 weeks, and Mag 7 was going to rip to new highs, and I said, you know what stock's going to lead it? Most everyone would have said NVIDIA.
Yeah.
Like
NVIDIA.
like it would have been the stock. And I think it's actually shocking that it performed so badly and did so poor in terms of this. And if you were to look at this on a relative basis versus Mag 7, it's got to be terrible. Like it's got to be just an awful looking chart. So if Mag 7s go for sale, I think this probably leads on the downside. And so although I am bullish on, like, I expect a Santa Claus rally, I am an uber bear on the other side of this, like come January. I think that the seasonality is going to play out exactly the same as 2021/22, at which point the selling came right out of the gate. And I suspect that NVIDIA is going to be leading on the downside. I think this stock is sick. I think the reality is that we're in this huge tech bull market and this thing can't go up. To me, it looks like a sick stock.
You know what? I'll agree with you in some degree, but what's interesting is how it held up relative to the other semiconductors. Like, let's just go through a bunch of these. Like, this is the Intel chart, right along its all-time low. Like Qualcomm, just trading along its all-time low. AMD, trading along its all-time low. Micron, trading along its all-time low. We have semiconductors having their faces ripped off right across the board, and NVIDIA is holding up now.
But AVGO is a semi, right? Like Broadcom, it's a semi. It's ripping to new highs. That's the new leader. So yes, I hear you what you're saying. I'm not going to disagree that kind of it's middle of the pack, but it's not like it's that great, NVIDIA.
No.
Like this is the stock you want to own in terms of semis.
Look, when the market turns, and I do share your bearish sentiments. Well, when the market does turn, it's not like NVIDIA is going to hold up. There's no way. Like the stock will go down. So I mean, the puzzle we're trying to solve together is like, what's the path for the next couple of weeks leading up to what will be a challenging new year.
So I think it just treads water. So I hear what you're saying in terms of it might lead.
But I think a test of 150 is treading water.
So wait, what is that? Pull up the chart again. Let me see it.
No, like that would be a double top retest. Basically,
so where's 150? Can you put it in a line? Because I can't. My old eyes.
Yeah, right here. Like it would.
Oh, you think it's going to go that high?
I'm just saying, like a double top retest. I think a double top retest is not impossible.
Yeah, I don't think you're probably right. You know what? We could just get like a low liquidity.
If you think about what the market specializes in, it's the pain trade, which is that if NVIDIA starts to break out, there's going to be people that are going to feel like the bus is leaving the station and they're not on. And that's going to spur some buying just in time for like a prairie dog to rip the rug out from underneath their feet. So if you think about what could screw over the most amount of people and use that as your base case, NVIDIA actually breaking to a higher high before falling would cause the maximum amount of pain.
Could be. Okay. I won't disagree with that.
Right. And that's okay. So now all these stocks were what was driving the flows. And so let's talk about the sectors that ate it. And so let's start off. Obviously, the technology indexes and everything held up. This is the XLK. And so it's held up there because obviously the Mag 7s are doing their job holding in the broader tech index. But what's interesting is like the financials were genuine leadership. They were actually momentum going into and even the weeks right after the election. And they had just an awful 1 month run here. Like this has been just relentless selling in the financials. Even look at the regional banks, the way that they faked everyone out with a prairie dog break to a higher high, and since has been just relentless selling. So I would argue the financials and the energy, which were huge supposed benefactors of a Republican victory, they were just where so much heavy distribution has been going. Like, look at the way that we talked about the XLE, like what a drop on the energy basket in a
It
span
is
of
an
like
ugly chart. It's
what?
like the dog in Deadpool, the latest Deadpool versus Wolverine. It's like one of the ugliest charts I've ever seen. It's so ugly it might be good, just like that dog.
Yeah. I mean, it's like 20 in 28 days, the thing wiped out 15% and broke even to a fresh lower low. Like just unbelievable. Like the Exxon Mobils of the world just had their feet cut out from underneath them. It was insane.
Well,
Now,
there's been so much selling, it's even overwhelmed the Buffett. Buffett's been on buying Oxy, and he's just been getting like, sold to you, Buffett. How much you want?
Yeah, but you know what, Oxy never had that same downside momentum, so you can clearly see that he was more than happy to provide a bid, you know, and like and scooping anything up in there, because that relentless selling was not as pronounced in Oxy. Clearly, he was there, but doing the buying. But I mean, it does show you just how cheap the stocks are when, you know, Buffett's favorite asset now is holding cash.
Yeah.
And he's willing to put some of it to work on this.
Yeah. That old man doesn't know anything about investing
No,
anyways.
absolutely not. Absolutely not. David Portnoy, that's the guy you got to listen to. So let's talk about, though, the consumer staple names, and they've also had an incredibly challenging couple weeks. You know, they looked pretty solid when it were breaking out in the first few first reactions to Trump and this little pop higher at the last weeks of November, and then just when the selling kicked in, there was nowhere to hide in this space at all. Just a very heavy sell-off. But I'm just going to keep going through them. Just interrupt me when you want to say something on one of these, okay? The retail started to turn out. Obviously, the Costco's and Walmarts were true like leaders on the upside. Actually, let's look at something like Walmart was a relentless rally. Like I've never, like, it's like a bull market in growth in Walmart stores. Like, just, have you ever seen a move like this in something as
do Costco.
Okay, well, of course, but like Costco as well, like just unbelievable run these retailers.
These things trade above, the Costco trades above 50 times earnings. It's like, it's a stupid retailer.
Yeah, and it's not a growth business.
Well,
I mean, they're expanding stores, but not to justify these.
Like it's not NVIDIA.
No,
like
it's not.
It's actually it's kind of insane, Patrick, and it just shows you how those quality, quote unquote, quality names that are getting like the factor investing is overwhelming stuff and causing all sorts of dislocations.
Yeah.
And so I think Costco and Walmart are, poster childs of that.
Yeah. Now let's move on to healthcare, because the moment the Republicans were showing signs of leading in the polls, the healthcare started to sell, and it's just keeps getting worse and worse. The selling is relentless, like literally. It's amazing. Some of the most blue chip names out there are just eating it day after day in this relentless selling. But you can see the healthcare like from $160 back in the summer to now 137 on the downside. Just ugly selling in the healthcare space. The interesting thing as well is the biotechs also stopped participating. Like, they got basketed in this immediately. Also, just the selling is relentless in that spot. Then the industrials, look at the, like, industrials were in such a clear bull market. Even that November 15th to 20th breakout looked like they were ready to just break to 52-week highs and run. And as soon as that Mag 7s after Thanksgiving kicked in, it was one of these value spaces that just consecutive, 10 down days in a row, as everyone was bailing on these. You go look at the aerospace and defense. Like, I mean, military spending around the world is just taking a second to load. But like the amount of selling that was happening in this aerospace and defense just rolled right over and started to sell. But even then, look at the way that the metals and mining sector got its face ripped off in just like 2 weeks. They were all holding up, just completely decimated. But then it's not just metals and mining. Look at the materials index, just completely decimated on the downside. You can basically see that if it wasn't the Mag 7, there's a monstrous bear market decline that's already underway if you're not in the Mag 7s.
100%. Patrick, when you were showing me these charts, all I can think about is that line that we used to use on the Canadian trading desk. They filled them in like a butter tart. The most Canadian line ever. Yeah. So these are terrible looking charts. And the amazing part about it is it's the vast majority of the market.
Yes.
So apart from those 7 to 10 names, it's really more than 7. I have a buddy who talks about the Nifty 20 because he puts in Costco and Walmart and some things that screen well that everyone's into. But if you take out the Nifty 20, this thing's terrible.
Yes. And the thing is that, you could go there and be a value guy, like a cuppy, ripping apart balance sheets, looking at cash flows and all of these things. But you can try to pride yourself on being an original stock picker, looking for great names. There is nowhere to hide if you were not in the Mag 7s. If you were not in the Mag 7s, everything was being decimated.
Well, that's not quite true. If you believed in the coin,
Bitcoin.
the Bitcoin, coin.
The coin.
Although I think they call it the corn. That's what the kids call it.
The corn.
Yeah. If you're really cool, you'll call it the corn.
I just love staying poor. It's
I know. I get it. It's me too. How about the Mister? We haven't talked about the Mister.
Oh yeah, we can actually, let's quickly just touch on a couple things. So this is the communication services ETF that you were referencing. Obviously, also had the holdings of some of the Mag 7s in there that made it hold up really well. It was basically making fresh new highs up until the Fed, but it's also been obviously under a lot of stress. But even
just 1 second, I pulled it up. Google is 20% between the two different classes of shares, and then Meta is 20. So 40 is that, and then you get some Netflix in there too.
Yeah.
So that's basically almost 50% is FANG type names.
Yeah. Look at the utils pull the Prairie Dog.
Oh yeah.
This is what NVIDIA could do, by the way. Like, I think, like, I would not be shocked if we saw NVIDIA do a classic Prairie Dog like this. This is I'll be watching. We'll see. Maybe it won't happen, but that would be a thing. But utils definitely rolled over. But another one that's interesting is the home builders started to pretty aggressively sell. I mean, they were holding right up until Thanksgiving, trading up along their highs, but you couldn't even hide in the home builders at all.
Well, because I don't think that was a place to hide, because bonds are actually getting hurt. Yeah. Even though I know we all know bonds are the greatest investment ever, and that there's never going to be inflation ever again, and that you should own tons of bonds. And back to home builders.
I'm a buyer though.
I know you are. That's a shock. Back to home builders. Warren Pies, 314 Research. We've had him on the show. Really bright guy. He's been sounding the alarm about this, and he's been talking about the fact that there are some fundamental cracks occurring in the home builders. And when that guy talks, I listen, man. He's a bright guy, super nice guy, but outside the box thinking, willing to take a stand on things. And I actually, a little part of me wonders if it's also indicative of the economy as a whole, Patrick.
Mm-hmm.
And I do think it's interesting in that people are the most bullish about stock market prospects and the economic prospects as they have been in many, many years. Sometimes cases decades. Like I saw there was some study the other day that was the highest expectations of forward stock prices that we've ever seen in terms of consumer sentiment. And I just remember back to a couple of years ago when we were here, and if you said something good about the economy, you got told you didn't understand how bad the economy was, that the things we're going to be doing. You try to explain fiscal to them, and they'd be like, no, you don't understand. Interest rates are going to crush everyone. And to me, this feels like the mirror opposite.
Absolutely.
Everyone's getting bullish and optimistic on the economy when the chances of it rolling over are highest.
The stock market has never crashed when everyone was planning on it happening. It always happens when everyone is offside. Yeah. Everyone needs to be long too much stock, too much leverage, too much exposure. Yeah. And then they all try to run for the exit door at the same time. This is what causes market events. And so when everyone's telling you don't get it, it means that everyone was planning on it. The thing is now it's the opposite. Everyone is like, Trump will never allow anything to happen. Yeah. Like you make all these different stories of why things have never been more bullish. But, when you look back at the monetary cycle, almost all the worst bear markets and or recessions tend to happen during easing cycles because the Fed has stayed tight too long, and eventually the knock-on effect kicks in. Yeah. And here we are, 6 months into an easing cycle, and everyone is bullish, like this is all gonna, be.
Well, I'll push back on that a little bit because I think people are too focused on the monetary side, whereas fiscal has been driving the markets for a long time now. But from that perspective, what do we have? We have Doge that's about to go and cut all these things. They're going to take an axe to all this spending, and like it or not, you can say that it's the worst thing for our economy, our society, but like it or not, government spending has equaled higher stock market prices. Yeah. And if you pull in the deficit and make the deficit tomorrow zero, I'm telling you, the stock market's going to be lower. Yeah. And that's the part that I think that people aren't kind of aware of. And you might say, listen, we should have a deficit of zero, and if the stock market's lower, so be it. And I'm not judging what we should do. I'm just judging what will be done. And if they do what they're saying in terms of the deficit, then I suspect that the stock market will be a lot lower.
I feel in my mind, there needs to be a certain amount of credit expansion occurring in a healthy economy. And when the private sector can take that baton and do all the work, then the governments can run a balanced budget and everything is fine because the economy is creating the credit. Everything is fine and expanding. The thing is if the economy is not healthy enough to the private sector is not healthy enough to run big credit expansion, and the government tightens their belt at the same time, then where's the outlet? Like it's a bad recipe. This is the wrong time, in my opinion, to balance the budget. They need to do it after they've kickstarted the economy and made the economy healthy and strong. Then they can pull back.
Well, you could argue the economy is strong now. I think the thing that everyone
did on the home builders, right? Like
no, but like on the whole, like just put aside stock market prices. See, this is the part that I think they equate stock market prices to economy, which is two different things, right? And I think the stock market has done well because of some of these policies that might not be the best for the long run health of the economy. And this is the part that I think that a lot of people have trouble with. They think, well, if you do things that are in the best interest of the economy over the long run, that's necessarily going to mean stronger stock market. And I'm like, I don't think that's the case. Like, for example, right now, the U.S. is running a deficit of 7% of deficit to GDP. Canada, we're in trouble with our government because guess why, Patrick? Because he's overspent to 2%. That's what it is. It's 2%.
Wow.
And like go look at like Germany. Germany's running 0.35% of, in their constitution is that they can only run a 0.35% of deficit to GDP. So if you actually believe that the deficit is the most important thing and that balancing the deficit is what's going to make a strong stock market, shouldn't you be buying all these other countries? Right? But you're not. And the reason is, it comes back to this thing. The government's deficit is the private sector's credit. And that basic accounting identity just keeps getting lost, and people get confused by it. And that doesn't mean
it's not good for the market and the economy for the government to stop spending. That's for sure.
Yeah. And you could say it's better for the economy over the long run, and I'm not going to dispute that. I'm not going to argue that. But the truth is, we're on a short-term sugar high created by huge amounts of U.S. government deficit spending. And it used to be that everyone was pessimistic and not believing that it could keep up. So they weren't paying peak multiples for that. But now we're all of a sudden, we've somehow, drunk the Kool-Aid, and we think, oh, this is going to be around forever. And in fact, it's going to grow from here. So we should pay 23 times multiple earnings.
Wouldn't it be interesting irony if Elon Musk's efforts were the very reason his net worth gets halved?
Well, he even said it. There's going to be pain if I get, to do this.
Yeah.
I think he actually does expect that.
Yeah. Yeah. There you go.
Anyways.
I mean, to him, it's not going to change his lifestyle, right? Like
he might have to start flying economy.
Yeah. Let's talk a couple of these commodities, and then we'll and the currency. We have to talk dollar. Okay, so let's talk dollar before commodities. Okay. So the dollar broke out fresh new high. I'm gonna put on a weekly chart. Like, we are now out of that 2-year trade range very clearly at this point. And so really the only thing standing in the way of the dollar index now is targeting its 2022 highs. And so at this moment, I don't see any reason the dollar can't do that. But what does that mean for each of the individual currency components, the cross currencies? And that really does put in question whether or not the euro has a trip below parity. And at this point, I think that this has a very reasonable chance of being a 2025 story. Any pushback on this?
The thing that scares me about the dollar is positioning. And ultimately, back to your comment that the Trump doesn't want a strong dollar.
The question is that how much does the dollar first move before
yes, I agree. So if you want to play the kind of squiggles, then that'll be the case. Patrick, my daughter's at the door, so you're going to keep going. No need to edit. Right. You're just going to keep talking, and I'll be right back.
No worries. All right. Well, then next thing to talk about is that pound sterling. So you can see that it broke fresh down to a bit of a lower low here, targeting the April lows at this stage. But it's that US dollar CAD that is interesting because this US dollar CAD has now broken to a level where we've only seen this price level once, and that was during that 2020 crisis event. And so we have a scenario now where, like, are we going to see like 150 on the CAD? Like, this is an insane move. What's your thoughts here, Ken?
Well, you know what I say. I've been saying for a long time, all-time lows, so all-time highs in this.
Okay, well, I'm going to put on a monthly, and I'm going to put it on the CAD US because that way we can see the Canadian dollar weakness. But on a monthly basis, I mean, we're talking about, we've seen 61, 62 cents before back in the early 2000s on this. You think that low?
Yeah, I think we're going below it.
Okay.
I've been saying that forever. I continue to say it. Our economy's in big trouble. People are kind of underestimating the amount of pain that's out there. We've gone and we've put so much debt on our consumer, and the only way out of it is to basically have, you have to make that debt cheaper, and the way you make the debt cheaper is you make rates lower, and all those things are going to cause the Canadian dollar to be much lower. But the only thing that kind of holds me back from being really bearish in terms of like saying that we're going to hit obscene lows in terms of the USD CAD is that eventually I suspect that the USD is going to run into trouble. And so one of the things is that I'm worried about getting too bearish on CAD because ultimately, eventually USD is going to be for sale. Like, I think that we're hitting whether it's this month or next month, I don't know, but it's a big long-term top.
I feel that the one thing I've known from you for the last like how many like half decade that we've been doing this shit together is you're right about your long-term market calls, but always early. And I think and I honestly view that you're right, because in the next couple of years, a massive US dollar bear market will be one of the biggest macro moves. It'll drive a huge commodity bull cycle. It'll be driving all sorts of different things. But what will be interesting is it wouldn't shock me if we were halfway through 2025 and we were still waiting for the transition moment of when that's going to happen. I do believe it will happen. I do believe you're going to be right. I just don't believe it's going to come as fast as you think it is.
Could be. I'm not going to disagree. Timing is never my strong suit.
But I won't push back on the thesis. The thesis makes complete sense, and it will. Like for instance, I'm shocked, but we might end up seeing, this is the U.S. dollar against the yen. We might see a full retest of that level from the carry trade. Like no matter how cheap that currency is, the U.S. dollar strength is prevailing over the yen's weakness.
I'm not disagreeing, and I'm not going to say anything until Trump's in power, but let's see how long he's in power before he starts really complaining about this. And to me, if you're sitting there playing further yen weakness, you are risking a lot. You are the trade from a risk reward standpoint is, okay, maybe we go back up five handles.
You have to literally be trading this. Like you can't be long-term position holding a long US dollar yen. Like, and more importantly, why would you choose that? Like, why would you not lean into the CAD or the euro over playing it through the US dollar yen?
For sure. But I think you could wake up to him tweeting saying that the yen has to be up 50%. I think that the chance of a gap is way higher than people think. And on that basis, Patrick, I actually think that FX vol is the purchase of the year down here. Okay. And you know me, I hate being long vol. I think that FX vol is way, way, way too cheap, considering that Trump is going to come and that there is going to be huge moves, huge uncertainty. It's going to be wild. I think that buying FX vol today is like buying fixed income vol that period right before they started raising.
Would you be doing that with like straddling things?
Well, I think you can do that. I personally I went and changed all my deltas, delta ones
to gamma
into options, 1 year options. I was like, what the hell am I doing? Like, I'm sitting here and like, I could see a situation where I end up being right on the Canadian dollar, yet we still have a rip roaring rally of 5 cents in the next little while because of something that happens. Like, one of the things that we haven't spoken about, Patrick, nat gas. One of my buddies was just telling me that weather Twitter is going bananas talking about the potential for a cold winter.
Well, listen, buddy, I'm in Toronto right now, and it is cold. Like I'm dying to get on a plane and get the hell out of here. Like,
you have gotten soft.
I am
-7,
soft,
buddy.
It's not even. What do you mean? It was like fucking -17 another
No,
night.
that was with wind chill or whatever. That didn't go down to. Was it?
It
really?
was cold as. I'm
gonna look this up. I don't believe you. Toronto weather.
All right. Well, I'm going to keep talking charts. We'll save this for the post chart thing. Well, we can shoot the shit because I do want to talk about gold. It is, but listen, I want to talk gold. And one of the what I was just talking about with when Chase was on was whether there's a breakout was a fake out, because I looked back at this breakout attempt on gold back in May. And it was also like a quick run to the upside, and then still led to a multi-month further consolidation. And it was this like a fake out breakout, in that the real rally is a Q1 story, or whether or not it was going to already start. And clearly, it's a Q1 story. So the question, in my mind, this is definitely a consolidation point. What is it going to be? The question is, do we have a trip down to 2,500 still for a much deeper buy on dip, much closer to a fib retracement zone? Or is this going to be more of a kind of a horizontal triangle technical pattern of it just grinding sideways like it did in May, June, and July before bullishly breaking out? I don't have much of a bearish stance, other than I think that the breakout bullishly is now weeks, if not a month or more away. But when it does, it'll be a solid bullish move to 3,000. But at this moment, it's a waiting game, and it won't shock me for the rest of the year if we see gold just churning here without any flow.
Yeah, I'm not going to disagree. I think gold goes sideways.
Now, oil continues to trade in what I call, I'm calling it the fair value zone, like this area in here where huge amounts of volume has been transacting in this base. And I know this one guy that says there's no such thing as a quadruple bottom. I don't know.
That looks like a quintuple.
Yeah.
Quintuple.
Yeah, exactly.
Or sextuple.
I think that this is very close to lows, but I think the market gods are going to create the fake out, just the reverse of what I'm thinking NVIDIA could do, where basically this thing has a little turtle head formation, pops down into the low 60s just to get everyone that's short that excited, and stop out everyone that's been leaning into the support line, but this will still prevail as the big trade range. So there could be like some sort of a quick fake out on the downside, but it will still end up being a very solid base area. But if you got your stop losses too tight underneath, I still think there's a vulnerability to being knocked out.
Do you think that we finally have gotten to a point where the sentiment is actually no longer bullish and is firmly like bearish?
Oh my God. Can you find me a bull?
Yeah. Like
I can't find a bull.
Because think back like a year ago when everyone was talking about
that show I cheat on you with.
God, you always have to bring it up. Like, we talked about this in therapy. You weren't going to bring it up. You were just going to let it go be. And there you had to bring it up.
Absolutely. But he doesn't want to talk about oil anymore. And yeah.
Fuck! I got it.
It's not that he's bearish, just not interested. It's just nothing's happening there. It's there, like you go where the action is, and essentially this has basically bored the bulls right out of any interest. Like they're just nobody has any interest.
That is the most bullish thing I've heard in a while. Thank you for sharing that.
You're welcome, buddy. Okay, so let's talk nat gas. And this is the strip. So I'm using the ETF just for the simplicity. It's a 12-month strip.
What's the symbol on that? I didn't even know there was
UNL.
UNL is the 12-month strip. Oh, yeah. Okay.
So we can chart rather than this continuous chart, which has all the stupid contango backwardation.
You get a whole year of gas. Oh no, this is much better.
And so you can really kind of get a gauge as to what is happening on the general level of gas. And what you can observe is that this looks like one big inverted head and shoulders. Like it looks like it's just basing out. And if that cold winter, like you're saying, in any way materializes, this could be the base where nat gas gets some interest. Nobody gives a shit. That's a good sign.
Yeah.
Like nobody has any interest in this. And so that's definitely something worth watching.
I guess the reason I've never heard of this is it's got tiny market cap. So for those who don't know, be careful. Although for retail, it's fine. It's like there's no problem. But it does own all 12. Well, it's not only that. It's nice to own all the 12. Like I might just trade this. This is actually a great way to do it.
It's much simpler to put this on than to try to manage your own strip.
Yeah.
Because then it's just on your books and all those lines and averaging everything. You just put something like this on your book and you have one price, right?
Yeah. No, it's actually great. I'm surprised that it's not more popular.
Well, you know what? Maybe we just need to feature more on the huddle. I know our listeners right. will put it on their sheets. Anyway, listen. That's is there any other commodity you want to mention?
Nah.
Like I know cocoa and other things have been ripping, but I don't know whether they're worth really mentioning. Let's talk bonds.
Okay.
So obviously, the long bonds have been decimated. And we're now seeing, yields above 4.5% on the 10-year and stuff. This is like yield levels where I'm shocked that equity markets don't give a shit yet at some point. But
could you not argue that part of the reason bonds are down here is because people are moving out of bonds into equities?
Sure, but then where becomes where does the relative value start to kick in, where owning the bonds actually will have less risk than in equity? This is actually one of my big market calls. I want to fade the sell-off. Now, again, listen, you and all your buddies, what was the nickname I gave you?
You did. You had a good nickname that I've forgotten.
Oh my God, Danny, if you remember the nickname, jump on here. But you and your bond hating buddies are going to be right for the rest of the decade. Like it's not that bond yields aren't going to be under pressure and these bonds are going to be a horrible long-term investment. But if you're right that the economy can weaken, and if you're and we have all of these knock-on effects, at some point there will be a counter trend rally in these that may last 3 or even 6 months, and there will be a place to somewhat hide when everything else is having its face ripped off.
But why not own twos? Like that's the trade. Like that's the trade.
TUA. Yeah.
Like own twos instead. Don't look at the long end. The long end could end up hurting everyone, and everyone's sitting around owning long end going, why am I losing on my bond portfolio? Like rates are going down, and it'll be the front end rates that go down.
I think you can. I think that the twos will be the safer play. So if you're gonna go,
I think they're the better play. Forget about safer. You keep thinking that we're gonna get a situation where 10s go to 3, and I don't think that happens unless the world completely ends.
I think we could see 3. I do.
Yeah. So I think that 2s go to 3 and 10s actually go up in yield to 5 because the yield curve goes and steepens, and you get a situation where usually when the Fed's cutting, yield curve steepens, and it steepens to roughly 200 basis points. So you get a situation where 2s are 3.
You don't think
and 5 and 10s are 5s.
You don't think some operation twist won't be implemented if that scenario was happening?
No, at 5, no. And like that's the thing. People tell me, oh, they're going to do yield curve control and stuff like that. They're not going to do yield curve control at 5. They're going to do it at 7 or 8. And yes, then it's going to happen. So I definitely
they're going to massage the balance sheet. Like I don't think that you're.
Look, I
don't have that strong of a conviction that I'm gonna say that you're dead wrong, but at the same time, no, but at the same time, I'm not remotely as certain that an operation twist would not happen sooner. Your idea that they wouldn't move, I think they can. I think they can.
But I'm not even sure that an operation twist works.
Well, so it's going to influence flows. That's for sure.
No, so fine. So you say, you know what, I'm going to do this, and then it's just all the big guys go and say, okay, sold to you. Like if inflation's going up and they're losing control of the bond end, the long end, then it's going to be more difficult than you think.
Yeah.
I don't know. Maybe I'm wrong. Like, you know what? Like, I worry that it's a very crowded trade. But having said that, Patrick, I feel like nobody really has it on.
Yes.
A lot of guys will say, oh, they're going to lose control of the bond end, long end, stuff like that. Go talk to how many actual people have short bonds on. Nobody. Everyone's too scared to have it on. And if you go look at the JP Morgan institutional duration survey, they're actually at the highs, meaning that the real, sophisticated investors are actually long bonds. and long duration, they're more in your camp. They're like, oh, this is actually there's a good chance that we're going to get a move back to 4 or 3.5 on 10s. So therefore we should be long. So I don't know. It's a tough market and it's difficult. But I really do not believe that there's that many folks that are actually short bonds.
All right. Well, listen, let's wrap it up with two more things I want to show. Well, first of all, this is the first time that we have seen last week that there's a legitimate breakdown in junk bonds. Like, I mean, junk bonds were resilient. I wouldn't call this a big breakdown, but it is.
Yeah,
but it is a technical break. Look, you can draw any thick trend line you want. This is a technical break of a bullish uptrend that's been more or less in place, and we've got a breakdown. Now, when you look, this is the first time that we have seen a little spike higher in the credit spreads. Now, like, is this an alarming spike? No. I mean, we've gone from 260 to towards 3. I mean, it's nowhere near the consolidation we spent the vast majority of the year, which was like in the 3 to 3.25 kind of zone. But it is the first time they've moved in a while. And I'm just asking a question as to, is this mean we should start paying attention here? You know, this is in the past, many times we've looked at these areas as the canary in the coal mines, that something is breaking. And should we once again put the canary into the cage and put it in the coal mine to see whether or not this is where the problem starts to be really evident? Your thoughts?
I think you should watch it. I think there's a good chance this is just noise, but I am sympathetic to the idea that you should be paying attention. Okay. At some point here, credit is going to sell off, and there is a good chance that it's going to be before the stock market does in any way. And if that's the case, then it behooves you to make sure you pay attention to it. So I will give you that.
All right, buddy. That's all I've got. Any last chart you want me to pull up?
No, that's it.
All right. Okay. Well, let's close this thing up then.
Okay. So first of all, thank you for all of our listeners that are tuned in throughout the year. We really appreciate it. We couldn't do this without you, although we still might actually.
We can't do it. Well, maybe we can.
But we do appreciate you tuning in, and for all the kind comments and everything you guys say. You're a great bunch, and I can't, I don't think I've ever shared this, but I can't tell you the number of people that come on our show and then tell me later, say like, oh, geez, the Market Huddle listeners are the greatest bunch. Like, they've reached out and they said XYZ nice things and stuff like that. And you guys make us proud all the time. So thank you very much. So happy holidays, or Merry Christmas, Happy New Year. And thanks for tuning in.
Thanks for tuning in, everyone. It's been great. And let's have a hugely successful 2025.
All right, Danny, come on, bud.
Oh, there we go.
Just completely wiping out Patrick there because I'm in his studio. So I'm like, well, I'm Patrick.
There you go.
Upgrade. Sorry.
Oh, I was, dude, it's so cold out here in Toronto.
Okay, so I looked, it's -2, buddy.
Right now it is, but I was
it's -1. Well, what was it last night? Okay, so like,
well, listen, all I know is that when it was on Friday, when I was doing the 12 pubs, I was like,
okay, so we got to talk about that, because that's more exciting than you getting soft about about
absolutely.
So for those who don't know, Patrick comes back to Toronto every year, or he tries to do his 12 pubs of Christmas with his buddies.
Why would I come to see family? I'm just coming here just for the 12 pubs.
Listen, you're telling me that if there was the 12 pubs, you'd be here? I call bullshit on that. There's no way. So the 12 pubs, why don't you explain to people what it is?
Well, this is the 8th annual one, so we've been doing this. So this is just a quick picture of the crew and bar 3. We ended up having, I think, at peak 35 people show up. It was awesome. So
tell people what it is. Can you say bar 3 so they need to understand what's going on here?
It's the 12 pubs of Christmas, and so it's actually an English tradition, and we got it from a good buddy of ours that's been doing it for a decade or more out in Chelsea, London. And they've been basically, you do 12 pubs. You have to do 1 pint at each bar.
Yep.
You have 30 minutes. Now, there's all sorts of new rules that English use to make it that much more challenging.
Of course,
we just
keep serious drinkers.
Yeah, they're serious. Like, we just keep it simple. One beer, you got to do it in 30 minutes, and you got to make it to the next bar so you can keep repeating this process. You got to get it all done in 6 hours.
Okay.
And so it's.
So first of all, what is the difference in the English versus Canadian 12 pubs? Like, I'd love to know the nuanced differences of the rules.
Danny, do you have a second to Google it? Like, just try to figure out some of the rules for the 12 pubs so that we can see what the English do.
Because, like, in our day in university, they used to play this game called the Century Club, which is you had to drink a shot of beer every minute for 100 minutes.
The hardest part is the no going to the bathroom.
Yeah, that's right. That's strict rules. So that's the thing. You used to play. Strict rules was no going to the bathroom. And that's so insane. It's tough. Like, not only that, because you got like all those. That doesn't sound that bad.
No, it's horrible. It's horrible. I've done it, and it's the shots is not the problem. The problem is by the 70th one, you do need to go to the bathroom, and you've got 30 minutes that you have to wait. It's just pain. And
there was a couple of engineers on my floor at one of my residences that played the Bicentennial Club strict rules, and they did it. Fucking engineers, man, they're unbelievable.
Yeah. No, listen, they got to prove their worth by being able to achieve huge obstacles like this.
Danny, do we know the difference in the rules?
Well, the interesting thing is the Irish rules, I think, are slightly more interesting.
Well, of course it is. Everything in Ireland's more interesting. Let's face it.
Let's do it. What's some of the funny things?
So everybody has to wear a Christmas themed jumper.
Oh, that's good.
Which is obvious, right?
Yeah. We did ugly sweaters
that's what the jumper is, Patrick.
Yeah. They do something called silent pub. So it's where you assign a pub that's silent and nobody's allowed to talk.
Oh,
it sounds awful. No swearing. So I don't know about that. That's pretty bad.
Any of them? Or just at one bar? Like, I think they make rules that on pub 7, no swearing.
Yeah,
pub
it's like
3, no talking. Like, they make all sorts of like different rules, and when you get there, you have to follow that rule at that pub.
Yeah, that's right. So it's either a single one, or you can do it at all the 12 ones. So I feel like if there was a group that didn't really like each other, doing all 12 would just be perfect, really. And then by the end of it, you'd all like each other, I imagine, right?
The big tradition we have is by bar 11. Somebody has to go and do a McDonald's cheeseburger run. And when they bring a bag of like 40 cheeseburgers, and like Santa, they hand them out. And just like after you've had like 5 hours of drinking, this is the best tasting cheeseburger you've ever had in your entire life. It's
my question is, what do you have any rules if you break any of the, because there's some Oh, you don't have any rules if somebody breaks it? Oh.
No, because we do it the soft version where we're just getting together and things. So that we have a bunch of, like, I would say more than 50% of them only end up doing like 6 bars. They'll join by the 3rd one and they'll bail out by the 9th. There's maybe, I would say, 10 hardcore guys that are like, I'm going from bar 1 and I'm staying till bar 12 and doing the distance, and everyone else just pops in. The ladies stop by and
Danny,
say hello.
what group do you think Patrick falls into?
Well, quite obviously he's part of the 10, but I was actually going to suggest that I think he's trying to hide something, because if you take 1 and 0 and you knock the 0 out, you have 1, and I think that's probably you, Pat, by the end of it. With the 40 cheeseburgers in hand.
No, the funniest story was my former brother-in-law there. One time when we were giving out the cheeseburgers, stuffed one into his winter jacket. And then he put that jacket away. And next year he grabs that jacket and he pulls out like a cheeseburger that's a year old. And you know what? It was hard, but no mold.
Yeah,
literally the thing was solid, but zero.
I'm surprised
mold.
No one ate it.
No, but like the point is like, how does like McDonald's food not go moldy? Like, this is not possible. It wasn't like refrigerated or anything.
I guess.
You ask somebody who knows about chemicals in food. I'm sure they'll tell you why.
Speaking of food, I'm hungry, so let's call it a day. By the way, for those that actually know about the 12 pubs and want to comment in and give Patrick some ideas for some other
Yes.
and corporations in terms of rules, we'd much appreciate that, because I would love to send Patrick off with a little more strict rules of the 12 pubs, and then maybe get updates via Twitter next year and see how it's going.
I think so.
So please share some rules.
I think Danny needs to make it out. And
I think that's Danny's guy.
Need to make an appearance.
Well, only if I'm allowed to wear a kilt with no underwear on underneath.
Nice.
Oh, good luck.
-7, you're gonna do great.
Well, you're gonna love that. That was the
never
best
been to Canada. Never
have a
been to Canada.
Very small icicle. So yeah.
On that note, Merry Christmas, Happy Holidays, and all the best to everyone in the new year.
All right. Cheers, everyone.